Good afternoon, I'm Adewusi Adiola. The subject for today is financial accounting, and the topic is business transaction and documents. I'm going to create a diagram. I'm going to picture a diagram, a dramatic representation of the basic structure of accounting. Don't forget, the topic is business transactions and documents. Business transactions and documents. Immediately a transaction takes place in a business, we usually have some documents, and these documents are called source documents. As the name implies, source documents. They are the first document that you usually have when a transaction takes place. So what's the meaning of transaction? Transaction can be defined as the transfer of value from one person to another. The value may be in monetary terms, goods or services. In short, it is the exchange of goods and services for money. So transaction involve the purchase and sales of goods. We have different types of transaction. We have cash transactions and credit transactions. The cash transaction simply means the kind of transaction in which cash is exchanged immediately for goods. So the buyer will transfer consideration to the seller immediately for goods bought. So it should be observed that when a trader buys or sells goods for cash, he does not open an account for the customer or supplier. So for example, goods to Ada for 60 naira cash. In our cash book, the debit side is the receiving account, so all the money that comes in as income for us is being debited in our cash book, and the other side, which is credit side, is being, that's the paying account. Money that goes out is recorded there. So this simple illustration, some students don't have a very good background of it, which make them not to perform very well in financial accounting. But this business transaction and document will open their eyes to see what they need to do, what they need to know, and to understand it. So back to that, I already talked about transaction. I talked about the first thing, which is the source document, and the source document are invoice, credit note, we have debit note, we have petty cash voucher, we have receipt, we have check, we have pay in slip. All these are source documents. They are documents that are being issued when a transaction takes place. Please let's note that. Then going forward, we have prime books. These prime books are also known as subsidiary books. They also known as journal. They also know a book of original entry and prime entry. And there are sales day book, purchases day book, return inward book, return outward book, journal proper, and cash book. We actually have two types of journal. We have the general journal and we have special journals. General journal are the ones that the senior secondary school, they are into. We don't teach it in junior secondary school. It actually says, it's a summary of the transaction that takes place, that the account that needs to be credited and to be debited, with a simple explanation of what happened. So that is done in the senior. So the special journals are what we did in commerce in the junior classes. Special journals are the sales day book, like I said. They are simply books that record credit transaction, daily credit transaction. Now the next one is double entry in the ledger. All of the special journals are treated in the general journal, in the ledger. Like sales day book, the total of sales day book is transferred to the sales ledger. And as well, let's not forget that cash book is also part of this prime book, because it is done when cash is paid. We record all these transactions in cash book. So now after that, we have the double entry in the ledger. We have the general ledger, that is sales ledger. We have purchase ledger. We have cash book. We have private. You see that it's coming again. Cash book is coming again. And we have private ledgers. We have personal ledgers. So after that, after we have prepared that, we extract all these ledgers, and all these ledgers are transferred to our trial balance. And the purpose for our trial balance is to test accuracy of the ledger, and it's also to calculate our profit and loss. We take it to the trading profit and loss account, and to show assets and liability, we take it to the balance sheet. So this is the diagram, the picture, the presentation of this diagram of business transaction and document. I want students to understand. I started from the source document to the prime books to the double entry in ledgers, to test the accuracy, to calculate profit and loss in the trading profit and loss account, and to show assets and liability in the balance sheet. Thank you.